Ben Slater, Remax Preferred Realty. Thanks for tuning in, your full-time, all-the-time, lifetime realtor. In this video, we are going to be discussing the four components or four things you need to consider when purchasing a home with financing. Four things. You need a good realtor, you need income, a credit score, and some cash to put down. Realtor, income, credit score, cash to put down. As far as working with a realtor, we're going to be doing another video on the benefits of working together. But the short end of it is I am here to guide you from where you are now all the way through protecting your interests, assisting with the home search, running the numbers, till you get the keys in your hand and after. The next three components are really what your lender is going to look at, and that's income, credit score, and cash. If you're not purchasing a home with cash and you're borrowing money from a lender, they're going to have to pre-approve you and qualify you to receive that loan. So the three main components that they're going to consider is your income, your credit score, and how much cash you have to put down. First is income. Pretty self-explanatory. However, there's certain types. Some people are W-2'd, which is easy. That means you get a paycheck. You can see your bottom line number right on the bottom of the paycheck, what taxes are taken out. Other people are self-employed, like myself, or 1099, in which case it can be a little more complicated. Either way, you're going to want to have your tax returns done, and you're going to want to be able to quantitatively see how much income you have so the lender can look at it. And they're going to use what they call ratios, basically your amount of expenses per month, what the new mortgage will be, principal, interest, taxes, and your other expenses, whether you have school loans, credit card payments, car payments. They're going to put that on top. They're going to put your income on the bottom. And generally, the ratios vary, obviously, from lender to lender, and it depends on what type of home you're purchasing. It depends on a lot of factors, what your credit score is. But for the initial consultation, I like to use about 1/3 as a guideline. So if you're going to make $6,000 a month, you want your payments to be under $2,000 for everything. If you're making $10,000 a month, you can bump it up to $3,000. So that's the first thing they're going to look at. So I would say before you even look at purchasing a home, make sure you can quantitatively see how much income you have, and can you make your ratios more advantageous for yourself? Do you have payments that aren't necessary? Do you have payments that can be consolidated? Do you have a $1,000 a month car payment? Maybe you could trade that in to a $400 a month. It all depends. But that's the first step we're going to look at. And when we connect you with the lender, they're going to run through the numbers, and we'll be able to see exactly what you can qualify for based on your income. Second component, or the third component actually, but the second component that your lender is going to look at is your credit score. If you're under 600, you're going to have a problem. Bottom line, you want to be over 600, really 620 to 640. The higher your credit score is, the better your loan rate's going to be. And that's just, the way the world works. If you have great credit, lenders are going to be more apt to lend to you. They're not going to be as worried about you defaulting on that loan, so you're going to get better rates. So the credit score, again, you're going to want to have it as high as possible. And there's tricks to doing that. Sometimes it involves consolidating debt. Sometimes it involves actually getting a credit card or some other avenues of credit for people that don't have as much credit. I always suggest before you do anything, you speak with the lender and myself, because what you don't want to do is make your credit score go the wrong way. But that's the next component they're going to look at. Credit score has got to be as high as possible. Really, you want it over a 620, I would say. 600 minimum before you purchase a home. And the last component is cash. Obviously, you're going to need to put some money down on a home. How much money can you put down? Again, we're going to have a whole nother video on the advantages and the options as far as how much money to put down. But usually you're going to need minimum 3%, 3.5% if it's an FHA loan of cash to put down. And you're going to have closing costs as well. So just for an example, I pulled up a $300,000 home in Delaware County. Taxes about $6,500 a month. If you're doing an FHA loan, you're going to need about $26,000 to purchase, and your estimated monthly payment is $2,500 a month. And again, myself and the lender will break this down for you and show you the numbers as far as what goes where. But bottom line is you're going to want to have a nice chunk of change to put down. You're going to need at least 3.5% of purchase price, and then you want to add in your closing costs, which is transfer tax, title insurance, escrows. Your mortgage company will make you prepay the taxes that they're going to pay for you going forward. You have some settlement costs. So you want to add a good $15,000 in closing costs for a $300,000 house, roughly. Now, again, we'll do some other videos as far as there's some tricks we can use to offset those costs. There's something called Seller's Assist we can try and get, which will make your closing costs less. But as a general rule of thumb, you're going to want to consider you need some cash to put down, bottom line. So again, to recap, Realtor, income, credit score, cash. Realtor is going to guide you from where you are now to getting the keys in your hand and protecting your interests. Income, your lender is going to have to look at your income to see what you can qualify for. Same with your credit score, and you're going to need some cash to put down. Thank you for viewing. If you'd like to get started with the home process, just shoot me a message and we will start right away, or you can call, text, or email anytime. If you like this video, please click and subscribe, and I will see you in the next one. Have a great day.